we still see a lot of really interesting opportunities in Japan. But with the market having, run up so rapidly this year, it's only, sensible that it takes a bit of a pause at some time. The money's flooded into the large caps. I think maybe the next stage is that some of that money that's flooded into the large caps that comprise the major indices, some of that spills over into sort of some of the second tier companies. And that's where we see the biggest opportunities from this big governance story that's been going on for about 5 years now, but has really captured the imagination of global investors this year.
Jamie, I couldn't agree with you more about some of those I'll call them second-tier companies in Japan, because they're underloved, underappreciated. You look at the fundamentals, you look at their balance sheets, and if these were companies that were on the DAC, you'd be like, I'm buying them now. But the problem is, how do you overcome, especially for international investors that don't have that fundamental understanding of what's going on in the market? It's hard to get research coming out of Japan as well. How do you solve for that? Is it just going to be the expectation people are going to be more aware, or that the flow is going to come in at some kind of index level? How does the flow get in is the question.
Well, I think what we've seen is allocators looking for passive index exposure initially, as they realize that there is a great fundamental story in Japan. But what we're seeing now is big allocators starting to do the work on active managers. And I think when they start allocating aggressively to active managers, that's when you'll see that happen. And, anecdotally, we are seeing a lot of inbound inquiries. For the retail investor, the smaller investor, it is worthwhile finding, people that have been in the market for a long time, have a long track record. We've had our Japan strategies running for 25 years now, and we've compounded it around 10% above the market over that period. So, I think we're reasonably well positioned from that perspective to hopefully capture some of the investor interest that's growing in Japan right now.
I hear what you said, Jamie, about, you look at bottom-up stocks. But at the end of the day, bottom-up stock picking, a lot of these companies may look great, but they're not going to go up unless people want to buy them, and that is a sentiment-driven perspective. So just give me your sense to the point Will made about tipping points coming on here. Is there one ahead? Because we had moments of optimism, and we have talk of potential moves here, but is that optimism ever going to come back in real volume?
Well, I think we've already had the tipping point. We've tipped, and now we're progressing into the next phase, which is just the spreading of the governance story across a wider range of companies. And you don't even need the stock prices on a lot of these companies to go up. They're paying big dividends, and they're buying back a lot of stock. So, technically, that's going to push the stock price up in any case. But you don't need earnings to grow or investor sentiment towards these companies to improve a lot. You just need the cash to keep coming out, and or with a little bit of a push from investors on the register, maybe even improve those cash returns, realize some of the non-productive assets on the balance sheet, and then hopefully the next phase is actually engage in some operational improvement.
Them to grow, really?
You just need them to pay.
Well, if you're getting paid 10 to 12% in straight cash return, that's already better than what you'd expect most equity markets to pay you through time.